Welcome to the Infinite Wealth Podcast. I'm Cameron Christensen, along with our co-host Anthony Faso. We just interviewed Zeona McIntyre. She is the queen of medium-term rentals. I just made that up.
I like it.
Exactly. And Anthony, what's a takeaway or two that you had from this interview?
To me, it was eye-opening. We've for the longest time, we've heard about long-term rentals.
Mm-hmm.
Right. And then recently short-term rentals starting to pop up. And we've talked about ways that you can do that. Well, she's talking about somewhere in the middle, these midterm stays, which I think is very interesting. Right.
Mm-hmm.
And I'd kind of heard of like a corporate rental, but what she's talking about is having like insurance companies, when there's a fire, they need to reallocate somebody into a house. This is an opportunity. And then she also talked about, she call them digital nomads.
Yeah.
Where people who can work remotely, and how that has increased tremendously over the last couple of years. And many people are just going and checking out different cities, and they don't want to have a long lease, but they can have a shorter lease. Right. And what I also think is interesting is doing those midterm rentals, we can charge much more for rent. And right now with some of these properties, if you're buying a new one, may not be cash flowing at all, or maybe not as much as we're used to, but possibly incorporating these midterm rentals might be a way to get that cash flow number up to where it may make sense. What was your takeaway, Cam?
Yeah, I loved her story. And my biggest takeaway was really like the pivotal point when she was talking about even kind of got into this market. It was March of 2020 when the whole country shut down, and she had a short-term rental business, and it just went to zero, right? The bottom kind of fell out of it. And so she was looking to kind of pivot. And man, I'll tell you what, man, I love that entrepreneurial spirit, right? Of somebody that's out there and just making it work and saying, man, I got to make this thing kind of work out for me. And so she's able to pivot, be able to adapt to kind of what the economy was throwing at her. And I just love that aspect of it. Now she's got a great, successful business where not only is she thriving, but she's also teaching people how to do it. And not only is she teaching people, right, kind of the way that we approach is just through education. And so what we touch on in this interview is how she's done it. And then also we talk about her book, 30-Day Stay, A Real Estate Investor's Guide to Mastering the Medium-Term Rentals, right? If you guys are interested in this idea, make sure you guys check out her book. It's on Bigger Pockets. And hope you guys enjoy this interview with Zeona McIntyre. She's a real estate investor, real estate agent out of Colorado, Bigger Pockets contributor, frequent traveler, and now she is also an author. Hope you guys enjoy this video.
Enjoy the episode.
Take care.
Welcome to the Infinite Wealth Podcast, where we teach clients how to build wealth and create passive income without the risk of Wall Street.
Zeona, we are excited to have you back once again. We had you on previously, but today we're going to be shifting a little bit, and we're going to be talking about a topic that is a little bit more specific to you and how you've kind of shifted your business today. So thanks for joining us again.
Thank you for having me.
Absolutely. And for our listeners that don't know Zeona, she is a real estate investor, real estate agent out of Colorado. She's a Bigger Pockets contributor. She's an author and a very frequent traveler. We are connected on social media, and I see you moving all the time. So very cool. Awesome. Zeona, let's get started. Tell us a little bit about your background, and then we'll kind of move into how you got started into real estate.
Yeah. Well, I was going to tell you my background in real estate. Do you want my background in life?
Actually, I threw that in there because you threw one little comment in before we started recording about how you grew up in Hawaii and now you ended up in Colorado. But maybe just briefly, how'd you end up in Colorado?
Hawaii always felt really small for me. And so I don't live in a big town in Colorado. I'm in Boulder, Colorado, but I just needed something a little faster paced. And Boulder has a lot of entrepreneurial like feeling and spirit and people that are doing tech. And there's just a lot of action here, even for a smaller town.
So what I'm hearing is you had that entrepreneurial spirit before. I'm always curious, how did you find that? Was it books or
Your parents entrepreneurs?
Yeah, my dad was. So my dad was always looking to get rich quick somewhere. And so he was really into multi-level marketing and different schemes. And so he definitely had some experiences where he made a bunch of money and then lost money. And it was very yo-yo diet kind of feeling in our household. So I knew that I needed something more stable. And I know that some people look at real estate for a get rich quick thing. And I think maybe we were attracted to that initially, but I found that it is something that is actually get rich slow. Maybe
Mm.
that, but it
But
can
that doesn't sound
stay
fun.
rich. So I like that.
Well, very cool. Thanks for sharing that with us. But how did you get into real estate?
Yeah, so I got into real estate accidentally. A friend of mine told me about Airbnb back in 2011, and
Mm.
Oh, wow.
he was just kind of doing it as just a little side hustle and thought that I should get into it as well. And I was in massage school at the time, thinking I was going to start this whole business and doing massage therapy, and didn't feel like I had time for another side hustle. But he was very persistent. And after a year, he told me that he made $50,000 off an apartment that he didn't own, that he was just leasing out in New York City. And so it really piqued my interest and made me go, well, maybe I should just give this a try. And so I did start in that kind of arbitrage space, eventually could afford to buy something, and then started buying out of state where it was a little cheaper than Boulder. And so, yeah, that was 10 years ago. And now I'm transitioning into medium term rental from the short term rental.
Awesome. So, how did that transition come about? Was it something sudden? Was it quick? Did you see something where like, hey, I see a really good opportunity. Let's pivot here. What were you thinking?
Yeah, so I accidentally had a few longer stays. That just kind of happens when you're doing short-term rentals, but I never really thought about it until COVID. And so in
Mm.
COVID, there was this period for short-term rentals that was really intense. They kind of all just shut down. I mean, as everybody was quarantining, some places were just not allowed to do short-term rentals anymore. And so I saw that we had bookings like booked out a couple of months, and then they all just canceled within a couple of days of each other. And so it was a really scary time for me to think, wow, I built this business over 8 years and now it's just going away. And so I knew that I needed to figure out some way to rent my properties. And I thought maybe I would just rent them long term, but furnished for a while and see if I could wait out the storm, or even just month to month. And I think the biggest hurdle for me was that lots of my properties are out of state, and I wasn't sure, how are people going to tour them? What are we going to do? And I just figured it out. And so now I'm discovering a whole world of corporate housing. There's a lot of upside in this game. So yeah, I think it's really exciting.
Could you explain
Yeah.
we're familiar with long-term rentals, and
Yeah.
we've heard of short-term rentals. Kind of explain what the is it medium rental or midterm or
Yeah, so I think midterm rentals is what is like really caught on as their catchphrase. We called it
Mm.
medium term, and when we were writing the book, and so that was like a year ago when there wasn't really a term. So yeah, but basically it's just over 30 days. So our book is called 30 Day Stay, and it's really just anything over 30 days that's furnished. And so that's kind of the differing mark. It's not that different than setting up a short-term rental, but it is different about who you're serving. And so your
Mhm.
tenants
Okay.
sort of dictate the way that the action goes.
So who are the clients, or who are you looking for? Who are your customers for the midterm rentals?
Yeah, so a lot of people get focused on nurses, and that
Yeah.
can be a lot of the tenants, and they're great tenants too. So there's the traveling nurse or just traveling medical professionals in general. But you also have digital nomads, and that's become really big in the last
Mm.
couple of years, where people are now able to work from anywhere. And so it had been that maybe 7% of the workforce was able to work from anywhere, and now it's over 40%. And so there is just a lot of movement happening where people are working from home, but they're working from home in Denver so they can go skiing or whatever. Right. So we've got a lot of that. And then there is a whole subset of insurance claim clients, government contracts. There's really just a lot of different ways that you can find tenants.
Have you found a niche in any of those, or are you kind of touching on all of them?
Yeah, so I think the very beginner way and what we focus mostly on in the book is that you can market through Furnish Finder, which is going to be for traveling nurses, or you can be marketing through Airbnb and getting a lot of the digital nomads. But what I'm learning more now and what I'm kind of like moving into is the space of more insurance clients. And the reason for that is they pay so much more. And so
Hmm.
this is where you can get 3, 4 times market rate. So market rate would be what a long-term rental is paying. And that just means incredible cash flow where people can have a lot less properties, but still make a lot of money. So that's what we're trying to discovering now.
So what I'm hearing, the advantage of the midterm rentals is the ability to charge more than a long term.
Yeah, and have a longer stay. So in the short-term rental, it's under 30 days, but generally that term is like 3 or 4 nights. And people are on vacation, so they have a little bit of this kind of they sort of left their brain at home, right? They're a little bit difficult. They want to party. They might be feeling entitled to a special experience. These other people
Mm.
are here for
Mm.
work generally. So they're a lot more chill, I'd say. They're just easier tenants to deal with.
Are there different? You said you were doing this remotely. You're in Colorado. Where are your medium term rentals at?
Yeah, so I'm in St. Louis. I'm also in Florida. There's a couple of markets there that I own in, and then I have a place in Washington State. But I'm also in 3 markets of Colorado. So I've got some here in Boulder, but then Denver, which is 45 minutes away, and then Colorado Springs, which is 90 minutes away. So I'm a
Okay.
bit spread out, and I think that I'm kind of working towards bringing them all to a closer area.
Now, how do you manage those properties? I mean, they're very, very spread out.
It's all in the book, and you guys bought 3 of them between the 2 of you. But
We've
yeah,
got the book right here. Let's bring it up here really
you
quick,
do,
right?
30-day stay, yeah. So yes, we really want to detail every step-by-step thing in the book so someone could pick it up without any knowledge and start right after they finish the book. So there are a few different automations that you can use, and I think it's still really early days for this rental strategy. So more automations will come out. But yeah, I mean, mostly people are booking and communicating online. So it's not like you have to be local to do that.
But obviously, you need a cleaner or some team.
Yeah.
Uh,
So you can build out a team really simply. So usually we recommend having an investor friendly agent. So an agent who's probably investing or managing the same kind of rentals. And so that agent can also provide you with a cleaner or a handyman that's going to be vetted, someone that they're probably already using themselves. So it's pretty easy.
Awesome. And speaking of easy, right, is Anthony's probably going to try to do this. So how easy is it for somebody to get into this, right? So who's the kind of medium term market or medium term rental strategy for? Who's a good fit for this? Somebody that has a few short term rentals or what?
Yeah, I mean, if you have a short-term rental, that's really easy to pivot. Some people even do what we call a hybrid model. And so they're doing short-term rental in their high season, and then they do that midterm in the lower, like slower times, which is usually around the winter time. And so it just allows them to have less vacancy because they're filling in the whole term rather than just the weekends. Right. So that's easier if you already have something furnished because then you're just changing the way you're managing your calendar. But what's great about this, just like a short-term rental, is that you can do it with a bedroom, you can do it with a basement. It doesn't have to be its
mm.
own unit. I prefer doing something where it's its own unit and I'm not sharing my house with somebody, but some people do that.
So you could do single family and multifamily. Is that what I'm hearing?
Well, you can rent a room. So
Yeah.
if your grandma or somebody had an extra room, she can definitely just host nurses in her bedroom instead of having a long-term tenant or having somebody who's coming in and out every 3 days. So sometimes it's just nicer for people to have someone who stays about 3 months.
And then could you rent out multiple rooms separately? Like, say you don't live there, but you have a 4-bedroom. Are people renting out to 4 different tenants with separate agreements?
Some people do that. I find it to be really management intensive. So
Mhm.
I don't want to do that, but
Yeah.
you can definitely. But actually, the bigger houses, like 4 bedrooms, they are great for insurance clients. So
Mm.
people are generally, maybe they had a fire in their house or a flood or something, and they need to be out of their house while they're doing construction for a couple of months. They pay a lot coming from the insurance companies. And so they like to be in a big house because it's usually a family.
Mm. Sienna, earlier you mentioned that you've got several different markets where your properties are at.
Yeah.
One is, how did you come about those properties? And then two, I think you also mentioned that you're trying to consolidate. What what's kind of pushing you towards that decision?
Yeah, I think I found those markets just almost accidentally. I do a lot of consultations with people. And so often I'll hear about something from someone and realize, oh, this is kind of interesting, and go look at the numbers and get excited about it. So I definitely hopped around a few markets, and that works fine with a short term rental. But what I'm finding with this medium term space is that I really like to have a lot of properties in one town so that you can get known by agencies or recruiters that are looking to place their employees, that you're that person for Denver, for example, and you
Mm.
can have 5 places or 10 places, and be able to help them when they need to place somebody. So it's a little bit easier than if you just have one property in that town, and then you have to rebuild these relationships in all the towns.
Now, you mentioned a couple websites where you could advertise your property. How do
Mhm.
you get in with real estate? I'm sorry, with insurance companies?
Yeah, so there are specific sites where people list for those. I'd have to look up the exact names, but there's like corporate housing by owner. There's one called CRS. Yeah, there's just a few sites that are more specific to looking for corporate housing, and that's kind of what they're calling it. So they troll these particular sites. Zillow actually is a good place to list, but you want to be listing for a lot more, and they kind of find you that way. You're not going for the average tenant. And so for example, there's this person that I know outside of Memphis. He's kind of in the sticks, just like way out in the county, and he's renting out houses for $4,000 that he originally picked up for like 90 grand. And he said that some people have reached out to him on Zillow and been like, are you crazy? No one's going to pay this, blah, blah, blah. And he's like, that's not who I'm looking for. I'm waiting for
Yeah.
that insurance person, the government contract. They don't bat an eye at these prices. So you just get less inquiries, but when you get one, you get one.
Ziona, I noticed, and we've talked about this before in a previous one, but you're a real estate agent as well.
Mhm.
Is that an advantage to kind of being in this short term, medium term rental space, or disadvantage?
No, it's actually an advantage because when you're listing some of these websites, people are relocating. So maybe they're saying, I just want to rent a furnished house for 3 months while I decide if I like the job that I'm taking, or
Mm.
while we look to buy a house. And so if I find out that they're looking to buy a house, I can often sell
Mm.
them that house. And so we've gotten a few clients that way, which is great.
You said you got started in Airbnbs in 2011 or 12, I
Mm.
think, right?
Mhm. Yeah.
Kind of looking back, would you maybe give yourself any advice that you know
Mm.
now that you would have back then? Maybe do it a little
Mm.
sooner, or what?
Good question.
Maybe I would have grown a little faster. I really took it slow. I picked up like one property a year, and nowadays I'm seeing all these people where they get, they just start multiplying. They pick up all these multifamilies and everything. I just didn't have that mindset at the time, but I still ended up with 12 units. So, I'm fine here at the end of the day, but um I think maybe I could have grown faster if I wanted that. Yeah.
How would you have done it if somebody's kind of looking at your story here?
Yeah, I think moving more and doing what I call house hacking, or like an owner occupied loan, that's a
Mm.
really great advantage. I didn't know about that when I bought my first property. I put 20% down. You can buy your first property for 3% down. And then if you're willing to move, so maybe you start this young before you have a family, or you get your family on board, I don't know, but you can move every year and go and rinse and repeat. You buy another property for only 3% down instead of going out and having to put 20, which is just a lot to save up for. So there are some kind of creative ways when you're working with an investor agent that can point you in that direction.
So speaking of creativity, today's market's kind of crazy. Interest rates are rising. Everything else is. What are you doing? Are you still buying? Are you still looking at opportunities? Are you putting stuff on hold? What's your approach here?
We're still looking, we're still buying. It's harder to make the numbers work if you're just looking at a conventional loan. They have come down a little bit, which is nice, but nobody knows what direction they're going to go. Um, I am looking into more creative finance. And so this was kind of big 20 years ago. So it depends on how long people have been around, listening to real estate, but creative finance like seller financing. And there's something called subject to, where you just take over someone's mortgage payments. That's coming back around. And the more you can be creative, the better off you are, because if you can take over a mortgage at 3%, like somebody had just even a year ago, you're going to do so much better. You're going to cash flow so much more than if you have to pay 7%.
Now, Zeona, you had shared that at the beginning, or one thing that enticed you was getting into short-term rentals. You didn't have to own the property. You would rent it and then kind of sublease it out.
Yeah.
Does that work with midterm rentals?
Yeah, there are some people that are doing it. They call it arbitrage now. And so, you could definitely look into that. I don't love it because, again, I imagine most of your listeners are looking to build wealth over time. Mm-hmm. And where you're really building wealth is in the ownership, right? There's a few different ways that you build wealth, but the main one is through appreciation over time. And you just don't get that if you don't own the property. So those people are working for cash flow, but it's no different than having an active role and a job. So I'm trying to figure out ways to be a little more passive.
Yeah, you're talking about being a little bit more passive. I was going to ask kind of what's your exit strategy, right? You've kind of mentioned that you've got 12 properties. Maybe you went at the pace that you went, but you said, hey, maybe I should have gone a little bit faster. What are you looking to do, right? Are you looking to kind of continue to create this lifestyle? Do you want to scale? What do you see for your future here?
Yeah, I think I want to move most of my properties to Colorado now that I can afford to do that. When I started, I was looking in cheap markets like St. Louis because you could pick up houses for under 100,000, and I did really well with that. And so Colorado is still intimidating. It's just an expensive place, but I'm really bullish on where it's going and the way that it's appreciating. So I feel good about that. So if I can figure out a way to master this corporate housing where we're charging these 4 times market rate, then I don't need that many places, right? So I'm slowly kind of changing my portfolio over. I think there are trends in real estate. Even just last year, short-term rentals did the best they've ever done, and now they're in a little bit of a slump. And so, just kind of following the trends and seeing what's working well. But right now, this month-to-month space is really, really powerful. And so I'm excited about that.
Go ahead.
No, well, thanks. Yeah. You mentioned that last year, right? They did really, really well.
Yeah.
From the outside looking in, it looks like there's was a huge boom, right? People were looking at this as a great opportunity. There's several houses on every block that were becoming Airbnbs, and then some kind of local government regulations stepped in. They tried to oversee some of this stuff. What are some of the concerns that you have for this type of business? Is it local government? Is it just HOAs? What are some of the concerns, and how do you manage those?
Yeah, so regulations are a big part of short-term rentals, and that's why a lot of people have left that space because you just legally can't do it. It just depends on where you live. The midterm space is kind of lumped in with long-term rentals. Anything over 30 days is considered long-term, and so they're just taxed differently, regulated differently. It's a lot easier to get a license if you even need one. So I'm not worried about that space going away.
What about HOAs? They give you a headache. Do you just avoid them altogether? How do you manage them?
I actually love HOAs. I love it because I live in Colorado and we have snow removal and you got lawn care and trash to deal with. There's a lot of things that end up being a pain. If anybody owns single family homes, you know that even just tree trimming and stuff, you got to get all these quotes and it's a lot of work. So having a condo is just easy. But it does depend what the HOA rules are. Most HOAs, they just say, hey, we don't want short-term rentals, so anything over 30 days is great. But occasionally you'll find one where they've got rules about, you know, it needs to be a minimum of 6 months or a year. Now that's rare, but you need to know that going into it. So it's part of your due diligence when you're buying a property, and your agent should be able to help you with that.
Now, when I'm hearing there's pros and cons to everything, and seems like one of the advantages of these midterm rentals are the much higher profit margins, and we can charge higher rent. What are some of the downsides of this compared to short-term or long-term rentals?
I mean, the downside with long-term is that you have a little more work to do, right? So you might have 4 tenants a year instead of 1 tenant a year. You've got to furnish the property. But right now, in most markets, if you buy a long-term rental off the MLS, you're not going to cash flow. It's going to be negative. And so, or very, very little. And if you have one maintenance thing that happens all year round, you're kind of out of luck, right? You just made no money that year. And so I think for people, they need to find a way to cash flow if they're going to buy these properties. And that medium-term space lets you do that.
Zeona, we've kind of touched on a little bit, but how did this book come about? Tell us how this originated.
Yeah. So I had been on Bigger Pockets podcast in 2017, and I was kind of one of the first people to talk about short-term rentals there. And a few years later, they asked me, maybe it was the next year, they asked me if I wanted to write a book. They were just starting out doing books. And for whatever reason, it didn't come together. You know, I kind of didn't take it as serious as I need to or something. Then the next year, Avery Carl wrote that book for them. So she wrote a short-term rental book. And I really was mad at myself. Like, wow, that was my opportunity. I should have done it, you know? But I also recognized that at that point, I was kind of burnt out on short-term rentals and I didn't have the passion. So I was not thinking that that was going to be my book. And then I got this idea. I was at the 2021 Bigger Pockets conference, and I was looking at all their books at the bookstore and going like, what have they not written about? Like everything's been covered already. And then I thought, wow, this is such a niche. Would they even care about this? But let's just try. So I pitched it and they were interested. And here we are now, you know, a year later, it's such a hot topic that who would have known? I definitely didn't, but it was good timing for us.
Absolutely. And again, we've got your book, 30-Day Stay, A Real Estate Investor's Guide to Mastering the Medium-Term Rentals. What is somebody going to find, right, when they get into this book?
Yeah, so we tried to make it a little more interesting. So I wrote it with Sarah Weaver. That's why I keep saying we. We wanted to make it where it was story heavy. So it feels like you could follow along in a story. So there's a lot of personal stories from both of us, a lot of case studies that we brought in. And a majority of them are from women investors, which we really loved because there's a lot of men in this space. And then we have it very how-to. So there's a lot of step-by-step, making it easy for someone to pick up the book and then go get a rental. We wanted people to be able to take action after reading the book.
Awesome. That's like Anthony's mantra around here is knowledge is great, but it's nothing without action. So, right. A full disclosure, right? We ordered the book, I got it, and then I ran out of town. I wasn't able to get into it, but I did overlook this thing and it looks awesome. This looks phenomenal. It is step by step, which is exactly what I would need to kind of start down this road. So great book. And we will certainly get into this and we'll give you a review as well.
Yeah. Well, now since you guys have 3 books, maybe you need to give one away. Make it a whole thing. So
that sounds great. Yeah, I love that, man. If somebody's listening to this and first one to reach out and says, hey, send it to me, we'll make sure we get this out to you. And special touch is I appreciate you signing mine, Zeona, as I don't think yours is signed, Anthony. So you missed out on that. But
mine will be.
Well, you guys just have to find me in person somewhere. Happy to sign.
We're going to Colorado.
That's a deal. I'm ready to go. But Zeona, speaking of finding you, is where can one of our listeners find a little bit more info for you if they want to follow up?
Yeah. So my website, ZeonaMcIntyre.com, has everything. So that's easy. But I also am really active on Instagram. So if you want to look at Zeona McIntyre is my handle there. And yeah, I answer all my DMs. So definitely reach out.
Zeona, actually, I tried to find your book on your website, and maybe it's there, but it wasn't as blatant as maybe I would have liked it to be. But you also have a link tree, and we're going to put that in the show notes, so that'll give you all of her social media and her website and the link for her book.
Great. Thank you. Well, we are kind of redoing the website, so that is really good feedback. Thanks so much.
My pleasure.
Yeah. Anthony wasn't happy about having to look for the book, but that's
Oh,
all right, because I ordered 2, one for him, one for me.
And I ordered one for me.
Zeona, thanks so much for joining us. Really appreciate it. We'll make sure that we get those links in the show notes so anybody can reach out to you. But once again, thanks for coming back and kind of peeling back the curtain on this medium-term rental market. Thank you.
awesome. Bye.
Go make it a fantastic day.
Take care, Zeona.
Thanks for listening, and be sure to subscribe so you don't miss out on the next episode. Also, check out our website, infinitewealthconsultants.com, to find our podcast along with other additional resources.